Yo, yo, yo. What is going on, guys? What is going on? Sorry, busy morning. We did go live with the crew, with the academy. We went live this morning, and then we're going over our plays, we're going over our charts, and absolutely sniped the living crap out of Google. We have a Google put right now. Let me show you what I'm looking at. And then obviously you guys are here because we're going to be talking about FOMC. But let me show you exactly what I'm looking at the moment with regards to Google. This was a play that we absolutely sniped this morning. We took it when we basically tested this imbalance here, and I saw that Google had relative weakness because Google was down 0.12% when the market was up like a third of a percent or 0.3%. And we hit this imbalance here, and we initially took the puts. I sold most of the position at 20%, but I held on to runners. Now, the reason I did is because if you guys are familiar with the way that I trade, you know that I use an array of things. I only use things that make sense. I don't use indicators. We drew these levels pre-market here, but basically we were still within this trend line creating this channel. And this line here, this dotted line, this right here is our pre-market low. And so I was hoping that we'd get below this. We are currently up 52% on these Google puts. I also have a Neo play, which I will go over with you as well. But we could potentially see over 300% on Neo by Friday, depending on where Neo closes. But here we had the 123 puts on Google. I'm hoping that we can get down to this level here, down here, this fair value gap down here at around 122. And these puts are already in the money. But the Neo play was a double calendar spread at the 7 strike as well as at the 9 strike. So if Neo can get to either 9 or 7 by Friday, this will be up over 300%. Currently, it is up 63%, so I could take profit here, but there's a lot more upside if I wait till Friday. And this was basically a post-earnings Neo play. And yeah, I mean, if you guys want in on this action, you know where to find it. Click the link in the description and make sure that you sign up. You will be a part of the academy. You will join us for our pre-market streams as well as all of the masterminds. We're doing a mastermind this weekend, June 18th. It is going to be, that one is going to be open to the public. They're usually only for the academy. Click the link in the description to join the waitlist. There are over 1,000 people in the waitlist right now. And once we get to 1,500, we are capping it because we simply cannot take that many people because of the Zoom limitation. So make sure that you sign up if you want to get in absolutely free on that mastermind. We're going to be going over our exact day trading strategy. I'm going to be showing you exactly how it is that I day trade, how it is that I look for these A+ setups, how we minimize our losses and maximize our gains. Those of you that are in the academy, I mean, you can feel free to ask people in the chat how the academy is, and they can honestly tell you, you know, the high win rate of the plays, the fact that we don't fuck around, we don't take plays willy-nilly. We're more about quality than we are about quantity. We're not taking trades all day, every day. This Google trade was my first trade of the day, and will likely play a post FOMC futures trade, maybe depending on what the price action looks like. But we don't take a ton of trades per day. The trades that we do take are A+ and A+ only. So make sure that if you want to be a part of the academy and you want to learn how to take only high probable trades to hopefully gain profitability one day, and use this to acquire some sort of freedom, make sure you sign up for the academy, link in the description below. And then this right here is the mastermind waitlist. Make sure you put your name on here as well, because like I said, we are approaching 1,500 waitlist attendees. And once that hits 1,500, we are closing this. This will be June 18th, this Sunday at 9 p.m. Eastern time. You will get sent the recording if you do sign up. So make sure that you sign up. Anyway, let me say what's up to you guys, and then we will get into what you guys came here for, which is FOMC. We have Papa Jerome Powell going to be talking at 2:30 p.m. Eastern time, but we will get the FOMC decision at 2 p.m. Eastern time. So just shy of 25 minutes here. Oh, a lot of you here. What's going on? What do you mean pause or skip? Aren't they both the same? I don't know who you're talking to. It's were you talking to someone before? For some reason I can't see the chat before. Stream Marabi. Pause or skip is the same. Yes. It's the only opportunity to get ahead of inflation. No. So here's what I think they will do. Okay. Let's take a look at this. The Fed funds futures are 97% the Fed is going to pause. This has never been wrong going back to 2009. So the Fed is likely going to pause. Now, this will be the most premature pause in history because if we take a look at the Fed funds rate, it might be, I don't know if it's hard for you guys to see. The green is the Fed funds rate. Maybe I should, hold on. Let me see if I can move this. No, you should be able to see it. The green is the Fed funds rate. We have the core CPI is red and the regular CPI is blue. The Fed funds rate's currently above CPI, all in well, but the Fed never pauses until we get above core CPI, which we have not. Core CPI is sticky as shit right now. It's the only one that is sticky. And core PPI this morning, the producer price index, month over month came in higher than expected this morning, right? So core everything, core CPI, core PPI are really sticky. So the Fed usually, if you see back here, the Fed funds rate is always above both core and regular or headline CPI. This will be, if the Fed pauses today, this will be the first time that they pause while core CPI is still slightly higher than the Fed funds rate, okay? But here's what I think they're going to do. They're likely going to pause, and then they're going to talk tough and say, yeah, we're going to pause because, inflation is coming down. We've raised a zillion times in a row. Now it's a good time to pause. But make no mistake, we are ready to raise if need be. But guess what? I don't see the Fed pausing and then raising. I think if they pause, finito. That's it. That's going to be the last rate hike of this rate hiking cycle. Now, does the bond market agree with this? I think the bond market is somewhat going back and forth with this. The Fed funds futures for July are pricing in slightly a hike at 59%. This is down. This is not going down. But slightly at 59%, the Fed is going to hike. I think that, the Fed is likely not going to hike, but I think that they are going to talk today about potentially hiking if they need to, right? Richard Harrington, Top Cards, Tootsie Pop, Marianne, what's going on? Oscar, Soner, Luis, Robert, Farming Education, what's going on? Conscious Investing, Max Zubik. When is the new bear market? Probably not for a while. What's up, Amy? How you doing? Is the FOMC meeting at 1:30? Okay, the FOMC announcement is at 2 p.m. Eastern. So we will get an announcement of whether the Fed hikes or not. We will then tune into CNBC for this. But at 2 p.m., the announcement's coming out. 2:30 p.m. is when Papa Jerome Powell comes out. And don't mind the white on my traveling trader champion hoodie. We will restock these soon because to me, they are the best hoodies ever. I love these hoodies. This is paint. I was painting something in the garage and I got paint all over my hoodie. So it's now my painting hoodie. It's not yogurt and it's definitely not something else. Sell the news day, Sagar says. Very good point. If the Fed is, if Fed funds futures are expecting 97.7% now that the Fed pauses, right? Someone knows something. If they're expecting this, could it be a sell the news day? All right, Google better continue tanking here because I want at least 100% on this trade. 100% for Daddy Z. That would be amazing. If we can reject off here where we also have VWAP, then I would be a happy camper. It can technically, I would be okay going up to this imbalance, even though we would lose some premium. But I'm holding, I don't know. Okay, look, if you are in this trade right now, which a lot of you on this chat who are part of the academy either are in it or took it already. But if you are actively in this trade, close it before 2 p.m., okay? Do not keep this open before 2 p.m. And I will likely close it in, I don't know, in 15 minutes. But I'm hoping we can get a rejection to around this level here at 122.30. This option will likely be between 80 to 100%, and I'll be a happy camper. So this is the type of rejection, continuation rejection I want to see. I will close it if we get uncomfortably above VWAP. But so far, working out really well. We shorted this from up here. Anyway, let me answer your question about the market. Could this be a sell the news event? Yes, very much so. However, as always, at 2 p.m. and at 2:30, this is going to swing wildly. And it's going to take both long positions and short positions. It's going to cause heart attacks. For me, I would much rather play a post FOMC announcement. So from 3 p.m. to 4 p.m., we will likely get a trending move in either direction. Now, in terms of the larger scheme, could it be a sell the news event? Yes. Why? We are at a very pivotal golden pocket here on the SPX. We also have this imbalance here. This will likely be some sort of reaction level. And if you guys follow this channel, you know that I covered this in the last 2 videos. But once you go from bear to bull, typically, aside from Corona, typically within 1 to 3 weeks, you see a nice correction, right? 5 to 10% around there, between 1 to 3 weeks. That's typically how it has gone, right? Since the 80s, at least. Actually, since the 70s. So am I expecting that? Yeah, I think it's plausible that this is a sell the news event. Now, what could happen, obviously, is we could see. Here's the thing, man. We have so many shorts, right? If you take a look here at the CFTC, we have so many shorts that I don't think we're done squeezing yet on these shorts. Okay, I think that we will, and these, by the way, are futures. These are not options. So this is the highest net short position that we've seen in futures. So we will likely need some of these to close. And I don't know how delayed the reporting is. It says the release date is June 16th. Oh, June 16th, we'll get an updated release. So June 16th, which is Friday, we'll get an updated release on this. But I do think we're not done squeezing these shorts yet. So what could happen is we could see a pop to about 4,500, which was my original thesis. Remember, for those of you that follow the videos, I said debt ceiling agreement to 4,300. We did that. Pause to 4,500, right? And then we could see a sell the news event. But do I think what it's going to be immediately, what the immediate initial reaction is going to be? I don't think anybody can tell you that. It really can go either way. If you guys are just joining, a couple of things. There's 1,200 of you and only 124 likes. I need you to bump up these likes. Why? Not for my ego. I love you guys, but not for my ego. It's so that other people can find good information. Hit that thumbs up, right? Because the way the YouTube algorithm works, if this has a lot of likes, then other people will find it. And I need people to find good information because there's so much crap information out there. Am I brazen? or pompous when it comes to our channel, yes, I think our channel and our community is the best online, because I will never give you a dishonest take, right? I will give you an honest take each and every time. Those of you that have been around know that is the case. I will give you an honest take each and every time. Just like I honestly told you when I sold my stocks that I bought, and a lot of the stocks that I bought in October, I sold in February. I said that, you know what, I should have been eyeing this 3,800 level more intently and jump back in for a swing. Now, obviously, I didn't sell my long-term portfolio. I've been investing for 20 years, okay? So, yes, I have shares of Apple at a cost basis of $5. Those aren't the stocks that I sold. I'm saying the stocks that I bought in October, I sold in February, not because I was bearish. I was just uncertain. That's it. It's just uncertain. One can be uncertain. Much better than someone who didn't buy at all and was sitting in cash 100%, right? At least I made a very juicy profit, 100% gains on a lot of those stocks, right? But I also said that I should have bought in at the 3,800 level. My mistake. But good news is that I know how to day trade, and I can easily jump in opportunities like this whenever I want, and I don't need to have, you know, a specific bias. This Google put right now, by the way, nearing 60% at the moment. We are hitting the 60% mark on this Google put. Yeah, nearing the 60% mark on this Google put, and I probably should close it by 155. And for those of you that are in it, should probably close it by 155. But anyway, I know how to day trade, so I'm not tripping. And I day trade every single day. I don't care what the market direction is. As I told you time and time again, since February, I'm not bullish. I'm not bearish. I simply don't know. And what I was what I was in the dark about, and what everyone was in the dark about, were a couple of things. Obviously, banks started failing, right? Nobody can tell me they felt good about that. And lucky for the banks, the Fed said, we'll do whatever it takes in order to backstop every single deposit in the United States. So unlimited backstops. Now banking is no longer a problem. And then two, I was unaware how corporate earnings for Q2 would be affected. I, along with everyone and their mom, thought Q2 earnings would be somewhat muted, if not bad, for some companies. Q2 earnings were amazing, right? Hence the run-up. So, you know, I will always give you an honest take, and that is what you need to give me a thumbs up for. All right. Let me see who's in here. Johnny Curry, what's going on, man? Johnny Curry is a longtime viewer. Johnny Curry, how long have you been watching? I want to say 2018. 2018, probably. I say they raised specifically because of history. Jay Powell loves history. What is the history, Bryce? The history is that this has never been wrong since 2009. Now, if they raise, I think it would actually show that they are really serious, because we are not above core CPI yet, as you can see here, right? We are not above core CPI yet. I give you 2 thumbs up like Siskel and Ebert. Didn't one of them die? Golden Pocket, October 22 lows it is. No, I'm saying October 22 lows are, unless we get a Black Swan event, October 22 lows will likely not be it. Smash the like button. My mouse broke. Wow, Suresh, your mouse broke. I apologize. I will send you a new mouse. Pick one, and I'll send it to you. Fit to flourish. This guy Z is the man. Thanks for your videos. Changed my life. Appreciate you, but I appreciate you, man. Appreciate you. Can you please share your thoughts on Apple? Narav says, I will share my thoughts on Apple if you actually tell me exactly what you're looking for. Just like in the academy, we do not allow thoughts questions. Ed L, increase the volume on the microphone? Really? Wait, does everyone agree with Ed L? Is the mic volume doesn't look low to me. I'm looking at the levels on my other screen. It looks fine. Do you think I should? Do you know of any reporting tools for Thinkorswim? Not sure what you mean. What do you mean, TH10? Reporting what? Love these lives, Aisha says. Thank you for always watching, Aisha. Aisha also a very loyal watcher. Appreciate you. Are you trading FOMC? I might. Yes, we're going to take a look at the charts. Thank you for all your content, learning tons. Appreciate you, Dallas Bates. Thank you. And for those of you that joined late, make sure that you click the link in the description. We are nearing the end of this wait list. We have over 1,000 people here. We're capping it at 1,500. I'm going to be doing another blast on Instagram, so it will likely fill by end of today. Make sure you get your name on this. Absolutely free, June 18th. And if you want to jump in on our plays, including we are now up 60% on Neo and 60% on Google. Click the link in the description. Book an appointment with one of our ambassadors. Apply to the academy. It'll be worth your while. I promise you, we do not bullshit. Are you doing any ZT trade for the Fed? No, not for the Fed. I will be doing a ZT trade because of this. This is the 2-year futures. I mean, the 2-year yield in blue. The Fed funds rate is in red. When the Fed pauses, what happens to the 2-year yield? What do you guys think happens to the 2-year yield? It's right in front of you, right here. The 2-year yield tanks. So 2-year futures are going to skyrocket at some point. Am I going to trade it today? Here's why I won't trade the 2-year futures today. Or maybe I might, but not before FOMC. Because I think the Fed is going to pause, right? But if they come out and talk tough about, we're going to pause, but make no mistake, we will raise rates in July if we have to. We will not hesitate. The bond market could anticipate that as a potential future rate hike, which means they will not pour into bonds the same way that they would if they are convinced that this is the last rate hike. If the bond market is convinced this is the last rate hike, then all of these bond yields here, let's see what the bond yields are. Then all of these bond yields here would actually tank, and we will start to see the yield curve between the shorter term bonds and the longer term bonds steepen. Right now, the 1 month, 2 month, 3 month, 4 month, 6 month, 1 year, 2 year, and 3 year are all paying more than the 5 year, 7 year, 10 year, 20 year, and 30 year. Make that make sense. That is what an inverted yield curve is, right? So if the bond market was convinced that this is the final countdown, that the Fed is for sure not going to raise rates again, these yields in the short term would start to drop heavily, which means that the 2-year futures would start to skyrocket. All right, guys, I'm going to close this Google put here, closing it for a nice 50% gain. Congrats for those of you that entered the trade. I'm closing it only because I have to show that I am responsible. Otherwise, secretly, I might hold it, but I have to show that I am responsible. Here's the Google put, the 123 put. A man of my word, we're closing this for 50%. Congrats to everybody who took this trade. Let me go ahead and close this real quick. Closing. Nice trade. Done for the day. There it is. 50% one and done. I'm going to keep the Neo trade open because, like I said, I'm anticipating Neo to be. I'm anticipating Neo to be. I'm hoping that Neo can stay at $9, which is exactly the level that we were eyeing on Neo. NEO, remember, was a double calendar play. Here is the play. Here's the exact play right here. If NEO right now, we're up 63% on NEO. If NEO can actually stay at $9 by Friday, this will likely be upwards of 300%. So again, another reason that I'm really gung-ho about our group is nobody offers the variety, or nobody's able to offer the variety that we do. Not only do we trade futures, obviously, not only do we trade calls and puts, but we also trade complex things like double calendars. We take a look at things like implied volatility. What is the expected earnings move? We're not just buying calls and puts for earnings, because a lot of times you will get crushed. So NEO, the $9 target for us, was very key. And betting that NEO hits 9, if that holds by Friday, we're going to make upwards of 300%. Now, the reason that I'm holding that is because a double calendar, even anything in between, right? So a double calendar looks like this. So here's the $7 mark, and here's a $9 mark. Anything in between, we make money. So I'm holding it for the risk of staying near this $9 by Friday for 300%. But if we drop and get anywhere here, we will still make money. It just won't be 300%, but we are playing with house money right now. So I want the chance for those big gains. How do you adjust your... All right, we're 3 minutes away, by the way, from CPI. So 3 minutes away, CPI. 3 minutes away from the FOMC rate hike decision, and 33 minutes away from Papa J. Powell. Z's knowledge is definitely better than Gareth Soloway. I don't know who that is. Apologize, but thank you for the compliment. Holding any plug power? No. I do think we will likely see a pop on Lucid, though, at some point, so I will likely buy Lucid calls soon. Tootsie Pop, please stop with the emojis. That looks really annoying. I have been a member since 2 years on Discord. Thought I am on autopay and grandfather. Please get back in your team. I apologize for that. You know, I personally don't take customer service requests, or else there's thousands of people in there. I would go absolutely mad and I wouldn't sleep because I am trying to find trades for you guys all the time. So unfortunately, you have to work with the customer service team. All right. At this point, would you wish the market to keep going up or take a healthy break downwards? I think a healthy break downwards would be nice. And I do think that entering on a pullback, whether it's 5 to 10%, would be welcome, right? I think starting to dollar cost average, I think pullbacks are very healthy. Okay. Am I wishing for the market to tank? No, I don't have a bearish position on the market. So yeah, but I do, from experience, I know that pullbacks are very healthy. So yes, I mean, I would want to see a pullback, right? Like, this is clearly an uptrend here. Oh, we're very close to a FOMC decision. So I'm going to jump to that right now. But, you know, pullbacks along a trend are very healthy. And, you know, I will definitely be entering on pullbacks for sure. Let me get to CNBC here. Well, they're currently taking a break. Pop out player.
40 seconds before we go to Steve. What kind of language should we be looking for in the statement and then in the press conference?
Will they talk about additional policy firming still to be needed? If so, I think that's, first of all, at least a broad hint that there probably are more rate hikes to come. I want to see if they revise up the terminal rate forecast in the projections that they give us. There's a good chance that even if they pause here, the signal from the statement and from that those projections are that they think they have one or two more to go.
In other words, from 5 to 5 1/4 up to 5 1/4, 5 1/2,
exactly.
Maybe even more.
Maybe even more.
Can they get rid of the range at some point? Can we just go back to one single number? Let's get to Steve Leisman with the Fed decision. Steve? the Federal Reserve pausing but raising the median forecast of the funds rate to 5.6%, indicating a very hawkish committee outlook and strong support for at least 2 more rate hikes this year. I think this comes under the definition of a hawkish pause, maybe a very hawkish pause. FOMC statement saying it's holding the target rate steady, allowing it to assess additional information, including the cumulative effects of tightening and lags of monetary policy. I want to go through in detail here the summary of economic projections and the funds rate. Only 2 members of the committee are forecasting the rate at the current rate of 5.13%. 4 support 1 more hike. 9, or half of the committee, is forecasting 2 more hikes, but there's more because 2 are supporting 3 hikes and 1 supports a full percentage point higher or 4 quarter-point hikes in the funds rate. The committee sees more inflation this year than it previously did, forecasting a 3.9% core rate versus 3.6 in the prior economic projections in March, and less unemployment, 4.1 versus 4.5. And moving on, they did see better economic growth this year, not tremendous, but 1% versus 0.4%. The statement said the economy continues to expand at a modest pace. Job gains have been robust. Unemployment has been low and inflation elevated. They continue to say tighter credit conditions are seen weighing on the economy, hiring, and inflation, but they don't act as if they will. Decision was unanimous. Guys, I just say, in terms of a hawkish pause, this is for sure that, with at least 2 more rate hikes forecast by the majority of the committee, and some want 3 and some want 4. And also, one other thing you want to look at is if you look at the real rate forecast, the one that was the nominal funds rate minus the core PCE they forecast, they're actually even tighter still. They had been forecasting 1.7. Now they're forecasting a real rate at year end of 2%. So that's even tighter than they had previously thought they'd be. Guys?
Wow, Steve, we don't even know where to begin, but stay there as we look through this. The market reaction obviously is initially sharply lower. Usually the market's a little slower to react to and saves this for later in the session. But right now we see the Dow tipping lower by about 200 points and the 10-year yield jumping to 384. Let's bring in Bob Pisani, Rick Santelli, along with the rest of our panel. Rick, what are your thoughts?
You know, my thoughts are, considering how Steve presented what the Federal Reserve is not only doing now, but what they intend to do. Of course, it makes the data-dependent part of me explode. But how could the markets not see interest rates rise and the Dow fall? What Steve said sounded hawkish times 10. But to me, if you listen to the Fed and you looked at the last CPI number, you're basically looking at old news, in my opinion. Let's just start with number 1, seasonal adjustments. Okay, one of the big issues that pushed CPI into hotter territory were used car prices. First of all, Manheim used car prices are seasonally adjusted. All of our jobs numbers, for the most part, are seasonally adjusted. And I continue to say seasonal adjustments aren't what they are cracked up to be, A. B, I think a lot of the used car prices are stale. Everything I'm seeing starting to come through looks a lot different. And I think when you go to July 12th and you see the June CPI report, you're going to see a significant ding from used car prices, exactly the opposite of the last report. That's not all. Let's think about the trim mean, the 16% trim mean put out by the Cleveland Fed. If you look at that, and of course that's ex food, energy, and used car prices, what you see is on the quarter-over-quarter annualized, it's now under 3%. So I think there are a lot of reasons to be nervous if you look at more stale data and you assume that these numbers are going to perpetuate themselves. But I think the reason equities were so strong yesterday is some of the traders have looked through the numbers and are trying to look towards the next several reports. And I think the future they see is different than the past.
All right, let's go to Bob Pisani for a quick update on where the stock market stands right now. It looked like it started to nosedive immediately.
Yes, but only about 25 points in the S&P. That is not a huge move. So remember last time we had a dovish hike, and this time we get a hawkish pause. I'm not sure this necessarily changes a lot. Certainly, you got half the committee supporting 2 more rate hikes. I think that's a lot more hawkish than equity traders anticipated. But I'm not sure it dramatically changes the situation. What we've seen here is the S&P right now is trading at nearly 19 times forward earnings. That is not only not a recessionary multiple. That is an expansionary multiple, and 25 or 30 points on the S&P isn't going to appreciably change that. The problem right now, and maybe this is a good pause right now, is the S&P and the markets are really pushing the limits of the soft landing story. We've moved up 5% just this month because the jobs report is so strong, the numbers are so strong, and the belief is the Fed is near done. I'm not sure 1 or 2 more points or 50 more basis points really makes a difference. So here's the hope for people wanting the market to move forward at this point. The volumes have been terrible recently. A lot of people still don't believe this soft landing story. And all of those people who bought treasuries, 1-year treasuries 3 months ago at 4.5%, the S&P is up 13% since that happened in the middle of March. And the question is, regardless of whether we get a 25-point drop in the S&P right now, which we just got, whether or not those people are going to get any kind of FOMO and believe that the economy is going to remain relatively strong. There's your hope for the market to move up right now.
Incredible reactions here. Dow's down 334 points. Greg, do you think this is them putting the knife in the soft landing story?
Not really. I was just actually looking over the numbers here, and actually, if you take the numbers at face value, they almost sort of strengthen the soft landing story. They've got GDP growth up more this year, like I think around 1% versus 0.4%. Tiny little trims to it next year and the year after that. Unemployment rate lower over the forecast horizon. So actually, if I look at the unemployment and the GDP forecast, the Fed seems more comfortable with the soft landing story. The weird thing is, but they have that against a world of higher inflation. So in some sense, they're saying, we think we can still get the soft landing, but given that inflation is a higher problem at the start of this process, we need to get the short rate higher to make sure that happens. I got to say, there aren't a lot of precedents for pulling this one off. I mean, you know, I hope so. The market clearly hopes so. This is a balancing act they got ahead of them.
Julie, how do you react?
You know, I think that the rate increases, as was mentioned before, are more about messaging than they are about their real financial impact. I think what's actually more meaningful going forward is what happens with the Fed balance sheet and quantitative tightening, because that is actually going to have the most impact on what's happening in bank reserves, and that in turn is going to impact their willingness to lend to consumers and businesses. So I think that's really important, and what this is about, these rate increases, are really about messaging about future rate cuts. It's saying, no, we're not going to be cutting rates this year. You need to push that back. We're pushing back recession risk too, but you need to push back your expectations for any kind of rate cuts.
Michael, how about you? I mean, Steve pointed out that the decision itself was unanimous, but the plotting of future rate increases was anything but unanimous.
Yeah, it's clear. It seems to be a schism between those who don't think the economy needs many more rate hikes to get to the inflation target, kind of what Rick was talking about. Inflation, there are measures of inflation which are falling quite significantly over the last couple of months and should continue to fall. Headline inflation going to have a 3 handle next month after the next inflation report. However, the Fed has to make sure that the market doesn't, or the economy and market participants don't get complacent, that all is well and done. It's just going to be this super soft landing and that inflation is going to come down to their target without much trouble. And it is a soft landing. The things are better than expected. As I mentioned before the release, that they're revising up all the positive things about the economy except for inflation. But they're dealing with that, saying, look, if inflation does not come down, we're not hiking rates today, but inflation does not start coming down as we project, we will hike rates some more. And that also means that we're not cutting rates as much next year.
Steve, I'm just going to bring you back in here. If you can give us some more context. I just want to make the observation that this is a bit odd that everything in the report that Greg's describing, GDP goes up, the unemployment rate goes down, inflation goes up, and they're pausing. And yet at the same time, they're telling us they're going to a 5.6% terminal rate. That seems like totally bizarre messaging to me.
Once again, like I said about Tyler in the last hour, you're confused, Kelly, because you're paying attention. That's exactly what's going on. And what I want to do now is I want to do a visual demonstration of the precise way that Rick just described how Fed is making policy. They are driving looking like this. They're looking in the back, but they're driving forward. That's exactly what Rick is describing. I was hopeful that the Fed was going to take a flyer on making policy on the forecast of inflation coming down.
All right, so some of you guys are asking me to comment. So what's going on right now? Actually, you know what? Fuck, let me check on Google real quick. Let me check on Google real quick. Google went down to the level that I was eyeing. Oh, shit. That would have been 100%. That would have been 100%. Sorry. All right. All right. So what had happened was the Fed paused. And what did I say before? I said that the Fed is going to talk tough. And that's exactly what they did, right? The Fed basically said, and it is weird. It is weird messaging. So the Fed basically said this. They said, we expect inflation to go up. We expect GDP to come down. We expect unemployment to go up. We're also pausing, but we also see the terminal rate at least 2 more rate hikes. So more than half of the Fed members said, we're expecting 2 more rate hikes. A couple of Fed members said we're expecting 3 more rate hikes. So no more 4,500, eh? Jesus Christ, bro. I swear to God, like sometimes I love most of you, but there are some viewers that really have nothing better to do. And the worst part about it is they don't even listen to the full capacity of what you're saying, right? So I said that if they pause, right, depending on how tough they talk, if they pause, we could see 4,500, They paused, but they also said 3 more rate hikes. Who would think that? It's so crazy that people are I don't know what it is. I don't know what it is about psychology. Either they're missing something in their life, or they were talked down to by their parents, and they just have this like incessant urge to like find something and then try to hold it against you, right? It's crazy. People like it's hard for me to respect people like that. They're not serious people. So yeah, I mean 45. So if the Fed paused and said maybe 1 more rate hike, maybe blah 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 blah, then yes, of course we could get to 4,500. By the way, Powell still has to talk in 18 minutes or 17 minutes, right? Powell still has to talk. What if Powell comes out and tries to massage it and soften it a little bit? Who knows, right? We've seen adverse reactions from the release and then a complete opposite reaction once Powell starts talking. The point is, if the market is expecting that the Fed is not going to hike anymore, that gives the runway for both the stock market and the bond market to move, right? But if the Fed comes out and says, oh, you thought we were going to pause? Not only do we think inflation is going up, but we also think the GDP is coming down. We also think unemployment's coming up, and we're going to raise 3 more times, motherfuckers, right? So obviously the market's not going to like that. Now, obviously, I think, especially because there are a couple of people like Nick Timiraos, I think from the Wall Street Journal, that really do a good job of pushing Powell when they question him. So, I think that they're going to push Powell to a point where he will likely try to soften with language, right? So this initial move could get worse if he fumbles, if he doubles down. This initial move could get better if he comes out and is like, no, guys. You see that report that came out earlier? I was just messing around. Here's what's really going on. We're pausing. It's going to be data dependent. We're not, that 3 rate hike thing, that was only a couple of rogue Fed members. I personally don't agree with that. If he says stuff like this, yes, the market can bounce back. So, unless you're Nostradamus, you're not going to know how the messaging is going to be released, right? The market is down. Time to buy. Not yet. You want to see a nice, healthy pullback. For sure. Don't get mad, Z. It's Friday. It's not Friday. It's Wednesday, bro. What kind of drugs are you on? Give me some of that shit. It ain't Friday. It's Wednesday. Just block him, Z. No, I don't even know what the fool's name is anymore. No, I'm not blocking him. Plus, it would give him too much satisfaction. More satisfaction than his daddy ever gave him. So, no. Cornholio, 2 increases still to come. I personally don't think that's going to happen. I think there are messaging that because they want to appear serious, but I don't think it's going to happen. Thank God it's Friday. Juan, what kind of drugs are you on, bro? It's Wednesday. Where is it Friday? It's at best Thursday if you're in Asia. At best. Nowhere on planet Earth is it Friday. All right, we got 14 minutes until Papa J. Powell. Would have hit 100 banger on fucking Google, but congrats to those who took that play. Super congrats to those who took that play. Let's look if we can find a trade on ES. Exited Google, put 74% on the FOMC announcement. Damn, super dope. At least somebody got it. Super dope for our Academy member, Nabe. All right, so we got our trusty analyst looking to play ES volatility. All right, so looking at the ES chart, I would potentially play, I would definitely play a short from here, right? Now, very risky considering what Papa J. Powell is going to say. If this was normal market conditions, right, I'm playing a short from here. And by the way, if you want to learn how to do any of this, lucky for you, we are doing a free mastermind June 18th, 9 p.m. Eastern time, almost capped on the wait list. Make sure that you sign up for this. We are at over 1,000 people, 1,500. We're shutting this down. So make sure you sign up. It's absolutely free. The recording will be sent to you thereafter. Come learn how to trade for free. See what we do. But I would definitely take a short position if we retrace back up here. However, if we don't retrace before Papa J. Powell talks, and when he talks, you see the price spiking up, I'm not taking this. I'll wait until 3 p.m. Eastern and then trade that. Looking at NQ, probably a similar setup. Yeah, very similar on NQ. Let's look at Tesla. Tesla's one that had an interesting setup in the morning. These are levels that we drew in the morning, and in our live call this morning, our market open chat in the Academy, I went over how to trade these. But look at these levels. Look how fucking magical these levels are. This makes me happy. It makes me happy, yes, obviously because it validates what we do. But it makes me happy when people learn this shit, right? We got a reaction off of this level. We got a reaction off of this level. We got a reaction off of this level. And we got a reaction off of this level. Every single level we drew is like magic. So I was preparing for this and then obviously stuck in the Google trade as well. But there were some optimal trades here. There were some optimal trades on Tesla for sure, especially off of these levels. I am thinking about taking a credit call spread on AMD. AMD had a huge bearish engulfing candle yesterday. And then obviously the news today on the potential rate hikes is not going to be good for tech stocks. Now, again, I am going to wait what Powell has to say. Just like the reason that you guys just asked me, am I going to trade ZT futures? Thankfully, we didn't trade this. ZT futures absolutely tanked following that release that the Fed might hike 2 times, maybe 3 times. Because remember, the bond market wants certainty that the Fed is not going to hike anymore. If they think the Fed is going to hike any more and they continue that thought, I could see the bottom here for ZT futures, right? I could definitely see ZT futures hit that bottom. I could see these bond yields continue to spike. We were seeing a spike in the 6-month, 1-year, 2-year, 3-year, 5-year, and 7-year, right? We're seeing a spike in all of those. So the bond market definitely wants assurances that the Fed is done hiking before it stops tanking. Any questions from you guys? Because we do have Papa J. Powell in 10 minutes. In 10 minutes. You need to close some tabs. Willie Lim. No, I don't. If I close some tabs, then you're not going to get these trades. Biden had a fart attack. Sell. Thank God it's Sunday, Tootsie Pop says. Appreciate you doing a live session. Yes, for sure. We will continue doing that in the Academy for sure. Man, I'm enjoying my Friday. Really, you guys are taking this Friday thing to a different level. Z, what percentage of your portfolio is long, like your 20-year Apple holding? 100% of my portfolio is long. What do you mean? I don't have short positions in my long-term portfolio. SoFi is my first green play in 2 years. Holy shit. What is going on, Rodrigo Lopez? We've had 17 out of the last 20 plays green. 17 out of 20. Lost a ZT future swing, TECS swing, which I'm thinking about getting back into, by the way. It is at right around where our stop limit hit. Thinking about it, not yet decided on it. I'm going to wait for Papa J. Powell. And then what else did we lose on? Those might be the only two. So maybe 18 for the last 20. I'm trying to think. There might be one more. So either 17 out of last 20 or 18 last 20. Z, is the sign up link in Discord? The sign up link is the link in the description of this video. You will need to make an appointment with an ambassador because we don't just accept anybody or else our group would be humongous. So yeah, wow, 2,000 of you here. Guys, hit the like button. Hit the like button. There's 2,000 of you here. And there are what? How many likes are there? Let me find out. Let me find out, son, how many likes there are. What? 502 likes? Do I need to do a giveaway for you to get this up to 1,000 likes? What do you guys want me to give away? What do you guys want me to give away? This needs to be 1,000 likes. There's 2,000 of you guys here. And I appreciate each and every single one of you. But Jesus Christ. Membership of Discord. Okay. You want a membership of Discord? Cool. If you guys get this to 1,000 likes, I will give away I'll give away a month for 2 people. So a free month for 2 people. Get this up to 1,000 likes. The hat, Sumit wants a hat. Okay. I'll give 1 hat away. Actually, I don't think these are in stock. Let me make sure with the team. If this is in stock, I will give away 1 hat and I'll give away a month for 2 people to the Discord. All right. But for those of you asking how you sign up, it's the first link in the description of the video. Make sure you book an appointment. We cannot just accept everybody willy-nilly. Our group is extremely high value, and we like to keep it somewhat manageable, even though there are still thousands of people in there. But if we just opened it up willy-nilly, there would be tens of thousands of people in there. We ain't trying to do that. You know, but if you want some of these coveted plays, again, I can't remember the third play that we might have lost in. So it is probably 18 out of the last 20 were winners, but I'm going to be conservative and say 17 out of the last 20, just because I like to err on the side of being conservative. Papa J. Powell in 6 minutes. I think, yeah, this is absolutely tanking. I do think we'll see a rally when J. Powell talks. A very small rally. Not small, not necessarily small, but I do think we'll see a counter move. Like we'll see it spike and you'll see wicks in every direction. But it's nothing I'm trading. I would much rather wait until 3 and see where market structure is, which you will learn on Sunday if you join the absolutely free mastermind where we're almost capped at. See where market structure breaks and then take a trade from there. But we did hit a 60% banger on Google earlier in the day. 942 likes. All right. 947. 53 more. And I'll give away a month for 2 lucky people and one of these hats if we have them. All right. 40 more likes. It's your choice. You get there or you don't. Let's see what the probability now for July is. Wow. For July, the probability of a rate hike went up to 70%. This was at 59%. I personally think the Fed is not going to raise rates. I really don't think they're going to raise rates. The only way they raise rates is this. And they've done it before. It's not like they haven't done it before. So the Fed has paused and then raised before. However, if inflation comes back up, right? If inflation comes back up, then I think the Fed has no choice but to raise. And they've done this before in the 80s where inflation came back and they raised and they pushed that shit to 20%, right? If inflation doesn't come back roaring, I don't think the Fed raises anymore. All right, let's get to CNBC, see what they got to say. Also, I do want to get to your questions. Can someone share sign up link here? Okay. I'm going to share it with you since you guys do not want to take a look in the description where it is neatly laid out for you. Here is the Academy link where you have to apply to the Academy. Okay, I'm going to put it here. And if you are accepted, you will get a welcome email and a congratulations, and you will forever be a part of the Academy. All masterminds you will get, all courses, previous and future, you will get, all inclusive. And here's the link to sign up for the wait list for the mastermind. Those are the 2 links, since you guys don't want to look at the description. Z deserves 10K for his honesty. 10K, what? Donuts? 10K followers? Discord will be great to learn. I will join. Click that link. Ooh. Can someone share a sign up link? Okay, I just did. I hope you talk about the golden pocket in your mastermind. You know what, David Dahl? Lucky for you, that is one of the topics. How do I know that? Because I put it together. And we will go to Papa J. Powell in 1 second. But this is how I know that. Here you go. Here's everything that's going to be discussed. My complete day trading guide, how I trade futures, how I trade options, 0 DTE strategy, Fibonacci retracements, how to draw them, how to use them in your trades. This is the agenda for the mastermind call. So yes, I am going to go through that. I clicked the like button 2 times, transitory inflation says. Transitory inflation, if you click the like button 2 times, that means you didn't like the video because it will cancel it the second time. So unfortunately, your strategy will not work, although I do appreciate you. I do appreciate you. All right, guys, we're going to go to Jerome Powell soon. You definitely want to stick around because we will be trading after Jerome Powell too. Markets currently down about 0.5, 0.6%, waiting for the big man himself. I am really intently looking at an AMD short here. Multi-day, not daily. multi-day. We will see. We will see. Funny enough, NVIDIA is still goddamn green. See, guys, those of you in the academy, this is why, remember, I was eyeing this short. We did eventually get to our target, right? But it would have been a brutal hold, and you would have had to hold through the FOMC announcement. But we got to our target. I sent out an NVIDIA short as well in the what do you call it? In the academy. Here it is. But I personally didn't take it, in full disclosure. Again, I will never lie to you. I will tell you when I lose. I will tell you when I take trades. I will tell you when I don't. Oh, shit. Sorry.
We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We have raised our policy interest rate by 5 percentage points, and we've continued to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. In light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, today we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Looking ahead, nearly all committee participants view it as likely that some further rate increases will be appropriate this year to bring inflation down to 2% over time. And I will have more to say about monetary policy after briefly reviewing economic developments. The U.S. economy slowed significantly last year, and recent indicators suggest that economic activity has continued to expand at a modest pace. Although growth in consumer spending has picked up this year, activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. In our summary of economic projections, the median projection has real GDP growth at 1.0% this year and 1.1% next year, well below the median estimate of the longer-run normal growth rate. The labor market remains very tight. Over the past 3 months, payroll job gains averaged a robust 283,000 jobs per month. The unemployment rate moved up but remained low in May at 3.7%. There are some signs that supply and demand in the labor market are coming into better balance. The labor force participation rate has moved up in recent months, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown signs of easing, and job vacancies have declined so far this year. While the jobs to workers gap has declined, labor demand still substantially exceeds the supply of available workers. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises to 4.1% at the end of this year and 4.5% at the end of next year. Inflation remains well above our longer-run 2% goal. Over the 12 months ending in April, total PCE prices rose 4.4%, excluding the volatile food and energy categories. Core PCE prices rose 4.7%. In May, the 12-month change in the Consumer Price Index came in at 4%, and the change in the core CPI was 5.3%. Inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go. The median projection in the SEP for total PCE inflation is 3.2% this year, 2.5% next year, and 2.1% in 2025. Core PCE inflation, which excludes volatile food and energy prices, is projected to run higher than total inflation, and the median projection has been revised in the SEP up to 3.9% this year. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5 percentage points. We have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, especially housing and investment. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. The economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. In light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5 to 5.25%, and to continue the process of significantly reducing our securities holdings. As I noted earlier, nearly all committee participants expect that it will be appropriate to raise interest rates somewhat further by the end of the year. But at this meeting, considering how far and how fast we've moved, we judged it prudent to hold the target range steady to allow the committee to assess additional information and its implications for monetary policy. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. In our SEP, participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.6% at the end of this year, 4.6% at the end of 2024, and 3.4% at the end of 2025. For the end of this year, the median projection is a 0.5 percentage point higher than in our March projections. I hasten to add, as always, that these projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do at the Fed is in service to our public mission. We will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Thank you. Colby Smith with the Financial Times. I'm curious what gives you and the committee the confidence that waiting will not be counterproductive at a time when the monthly pace of core inflation is still so elevated. Interest rate sensitive sectors like housing, while they've felt the drag of the past Fed actions, have started to recover in some regions, and financial conditions, most recently were easing.
So I guess I would go back to the beginning of this tightening cycle to address that. So as we started our rate hikes early last year, we said there were 3 issues that would need to be addressed kind of in sequence. And that of the speed of tightening, the level to which rates would need to go, and then the period of time over which we'd need to keep policy restrictive. So at the outset, going back 15 months, the key issue was how fast to move rates up, and we moved very quickly by historical standards. Then last December, after 4 consecutive 75 basis point hikes, we moderated to a pace of a 50 basis point hike, and then this year to 3 25 basis point hikes at sequential meetings. So it seemed to us to make obvious sense to moderate our rate hikes as we got closer to our destination. So the decision to consider not hiking at every meeting and ultimately to hold rates steady at this meeting, I would just say it's a continuation of that process. The main issue that we're focused on now is determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time. So the pace of the increases and the ultimate level of increases are separate variables. Given how far we have come, it may make sense for rates to move higher, but at a more moderate pace. I want to stress one more thing, and that is that the committee decision made today was only about this meeting. We didn't make any decision about going forward, including what would happen at the next meeting, including we did not decide or really discuss anything about going to an every other meeting kind of an approach or really any other approach. We really were focused on what to do at this meeting.
So there was no kind of initial debate about the possibility of July, any sense of the initial support at this stage for that move?
So again, we didn't make a decision about July. I mean, of course, it came up in the meeting from time to time, but really the focus was on what to do today. I would say about July 2 things. 1, decision hasn't been made. 2, I do expect that it will be a live meeting.
Thanks, Howard Schneider with Reuters. I was just wondering if you could help us understand the narrative here, because it feels like there's been a level shift in the dots, stronger GDP, less of a hit to unemployment, slower progress on inflation, and I'm wondering, in this sort of, where's the disinflation coming from?
Sure.
The labor market's going to be stronger, it looks like. It's not coming from there. Demand is not coming down all that fast, according to GDP. You've doubled your estimate of GDP. So what's the narrative here? It seems like it's getting more immaculate rather than more messy.
So you're right that the data came in, I would say, consistent with, but on the high side of expectations. So, and if you go back to the former SEP, the last SEP in March, you will see that growth moved up. These are not huge moves, but growth estimates moved up a bit. Unemployment estimates moved down a bit. Inflation estimates moved up a bit. And, all 3 of those kind of point in the same direction, which is, that perhaps more restraint will be necessary than we had thought at the last meeting. So although the level, frankly, is pretty, the level of 5.6 is pretty consistent if you think about it, where the federal funds rate was trading before the bank incidents of early March. So we've kind of gone back to that. So your question is, where's the disinflation going to come from? And, I don't think the story has really changed. The committee has consistently said and believed that the process of getting inflation down is going to be a gradual one. It's going to take some time. And I think you go back to the 3-part framework for core PCE inflation, which is, we think, as good an indicator as you can have for where inflation is going forward. You start with goods. With goods, we need to see continued healing in supply side conditions. They've definitely improved a substantial amount, but if you talk to people in business, they will say it's not back to where it was. So that's one thing, and that should enable goods prices to continue, goods inflation to continue to come down over time. In terms of housing services inflation, that's another big piece, and you are seeing there that new rents, new leases are coming in at low levels, and it's really a matter of time as that goes through the pipeline. In fact, I think any forecast that people are making right now about inflation coming down this year will contain a big dose of this year and next year, will contain a good amount of disinflation from that source. And that's, again, probably going to come slower than we would expect. That leaves, the big sector, which is a little more than half, pardon me, of core PCE inflation. That's non-housing services. And, we see only the earliest signs of disinflation there. It's a sector, it's a very broad and diverse sector. I would say in a number of the parts of that sector, the largest cost would be wage costs. It's the service sector, so it's heavily labor intensive. And I think many analysts would say that the key to getting inflation down there is to have a continuing loosening in labor market conditions, which we have seen. We have actually seen, I go through a number of indicators suggesting there's been some loosening in labor market conditions. We need to see that continue. I would almost say that the conditions that we need to see in place to get inflation down are coming into place, and that would be growth meaningfully below trend. It would be a labor market that's loosening. It would be goods pipelines getting healthier and healthier and that kind of thing. The things are in place that we need to see, but the process of that actually working on inflation is going to take some time.
Nick Timmeros of the Wall Street Journal.
That's my favorite.
Chair Powell, what's the value in pausing and signaling future hikes versus just hiking now? I mean, not to be flippant, but I don't lose weight just by buying a gym membership. I have to actually go to the gym. 16 of your colleagues put down a higher year-end 23 rate today. A majority of you think you're going to have to go up by 50 basis points this year. So why not just rip off the Band-Aid and raise rates today?
So first, I would say that the question of speed is a separate question from the question from that of level. Okay, so and I think if you look at the SEP, that is our estimate, our individual. It's really accumulation of our individual estimates of how far to go. I mentioned how we got to those numbers. In terms of speed, it's what I said at the beginning, which is speed was very important last year. As we get closer and closer to the destination, and according to the SEP, we're not so far away from the destination in most people's accounting. It's reasonable, it's common sense to go a little slower, just as it was reasonable to go from 75 basis points to 50 to 25 at every meeting. And so the committee thought overall that it was appropriate to moderate the pace, if only slightly. And there are benefits to that. So that gives us more information to make decisions. We may try to make better decisions. I think it allows the economy a little more time to adapt as we make our decisions going forward, and we'll get to see. We don't know the full extent of the consequences of the banking turmoil that we've seen. It would be early to see those, but we don't know what the extent is. We'll have some more time to see that unfold. I mean, it's just the idea that we're trying to get this right, and this is if you think of the two things as separate variables, then I think that the skip, I shouldn't call it a skip, the decision makes sense.
I know you said July is live with only one June employment, with only the June employment and the CPI report for June due to be released before the July meeting. You get the ECI after, you get the senior loan officer survey after, you get some bank earnings at the end of next month. What incremental information will the committee be using to inform their judgment on whether this is in fact a skip or a longer pause?
Well, I think you're adding that to the data that we've seen since the last meeting too. Since we chose to maintain rates at this meeting, it'll really be a 3-month period of data that we can look at. And I think that's a full quarter, and I think you can draw more conclusions from that than you come from any 6-week period. We'll look at those things. We'll also look at the evolving risk picture. We'll look at what's happening in the financial sector. We'll look at all the data, the evolving outlook, and we'll make a decision.
Thanks for taking our questions. Gina Smilek, New York Times. You obviously, in your forecast, marked up the sort of path for growth, marked down the path for unemployment, marked up the path for inflation pretty notably. I wonder, since March, what has changed to make you think that the economy is a lot more resilient and inflation is going to be a lot more stubborn? And given that, why do you feel confident that this is as high as you're going to have to revise the federal funds rate, or do you think it's possible we could have even a higher than 5.6% terminal by the end of this cycle?
I mean, on the first part, I just think we're following the data and also the outlook. The economy the labor market, I think, has surprised many, if not all, analysts over the last couple of years with its extraordinary resilience, really. It's just remarkable, and that's really, if you think about it, that's what's driving. It's job creation, it's wages moving up, it's supporting spending, which in turn is supporting hiring, and it's really the engine, it seems, that is driving the economy. So it's really the data. In terms of, we always write down at these meetings what we think the appropriate terminal rate will be at the end of this year. That's how we do it. It's based on our own individual assessments of what the most likely path of the economy is. It can actually in reality wind up being lower or higher, and there's really no way to know. But it's what people think as of today, and as the data come in, it can move around during the intermeeting period. It could wind up back in the same place, but it really will be data driven. I can't tell you that I ever have a lot of confidence that we can see where the federal funds rate will be that far in advance.
Mr. Chairman, thanks for taking my question. You had said back at the end of May that you thought risks were getting closer to being into balance. Is that still the case, or has your mind changed about the balance of risks out there? And also, could you give us an idea of what would be a sufficiently restrictive funds rate? Obviously, the current rate, according to the committee, is not sufficiently restrictive. Is it 5.6? Is it 6? Where's sufficiently restrictive? Thank you.
I would say again that I think that over time, the balance of risks, as we've moved from from interest rates at effectively 0 now to 5 percentage points with an SEP calling for additional hikes, I think we've moved much closer to our destination, which is that sufficiently restrictive rate. And I think that means, almost by definition, that the risks of sort of overdoing it and underdoing it are getting closer to being in balance. I still think, and my colleagues agree, that the risks to inflation are to the upside still. So we don't think we're there with inflation yet, because we're just looking at the data. And if you look at the full range of inflation data, particularly the core data, you just aren't seeing a lot of progress over the last year. Headline, of course, inflation has come down materially, but as you know, we look at core as a better indicator of where inflation overall is going. So I think what we'd like to see is credible evidence that inflation is topping out and then beginning to come down. That's what we want to see. Of course, that's what we want to see. And I think it's also, we understand that there are lags, but remember that it's more than a year since financial conditions began tightening. I think the reason we're comfortable pausing is that we are still, much of the tightening took place over last summer and later into the year, and I think it's reasonable to think that some of that may come into effect. So we're, I think stretching out into a more moderate pace is appropriate to allow you to make that judgment of sufficiency, with more data over time.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. I wanted to ask further on the lag effects. When you're considering when you would hike again throughout the course of the year, are there things that you would expect to kick in as those lag effects come into effect that would inform your decisions? Have you learned things over the past year that give you some sense of timeline for when to expect those lags to come into effect?
Yeah. So it's a challenging thing in economics. It's sort of standard thinking that monetary policy affects economic activity with long and variable lags. Of course, these days, financial conditions begin to tighten well in advance of actual rate hikes. So if you look back when we were lifting off, we started talking about lifting off. By the time we had lifted off, the 2-year, which is a pretty good estimate of where policy is going, had gone from 20 basis points to 200 basis points. So in that sense, tightening happens much sooner than it used to in a world where news was in newspapers and not on the wire. So that's different, but it's still the case that what you see is interest-sensitive spending is affected very, very quickly. So housing and durable goods and things like that. But broader demand and spending and asset values and things like that, they just take longer. And you can pretty much find research to support whatever answer you would like on that. So there's not.
All right, so I'm just gonna pause here because honestly, he's now just running around the questions, not really saying anything poignant. Basically, again, as we said, massaged. What the report was. The report sounded very aggressive. He massaged it. That's why I thought we would see a bounce. You guys saw me short that rejection there live, $400 per contract. Sorry, I wasn't able to talk because, we were listening to him, but I was showing it to you. And that might even we might even get a bigger rejection here, but, I'll take $400 per contract. I'm going to wait until he's done talking and then likely trade that. That didn't sound dovish. It didn't sound dovish, but it didn't sound as hawkish either, right? It didn't sound like the report where they're saying, oh, we're going to do three more rate hikes, 2 rate hikes, maybe 3 rate hikes. What he said was it's hard to determine the terminal rate, right? That's very different than what the report said. The report said half of the members said 2 rate hikes are in the cards, and at least 2 members said 3 rate hikes are in the cards. Whereas he comes out and he says it's very hard to determine what the terminal rate is going to be, right? And then he said, we expect inflation to come in higher. We're not done yet, but we don't know what it's going to be. So when you have this sort of ambiguity, then honestly, you're going to see a pop. Now, after he's done talking, the market might then digest and trap all of these longs and end up short. But it's clear that that's, he's sort of an MC in that regard. Hannah Casey says, TTT Discord is worth every penny. Appreciate you, Hannah. We just shorted live for $400 per contract. It was easy peasy. That was the easiest setup. You guys saw me do it live. Again, the more you delay it, the more you delay your learning, the more in the dark you will be about this stuff. I'm not saying trading is easy, but doing it with thousands of people and including me, I'm active in there all day, every day, that know how to do this stuff, will really take your trading to the next level. We just hit 2 monsters, really 3 if you count the NEO trade. NEO is at 60% right now, 68%, almost 70% on NEO. And then we had the 60% on Google puts earlier, and then the $400 per contract on ES. So, say what you will. Here's the 68% that we got on NEO puts. I mean, on NEO double calendar. I'll likely close this on Friday, not today. But yeah, there you go. So make sure that you sign up. Someone asked me here for, and I'm gonna close Powell right now because he isn't saying much. So I'm gonna close this. We're going to trade the rest of the way, and I'm going to take your questions as well. Someone said, hold on. Where was that question? Where was that question? I'm looking for the question. Someone had asked if I can do a discount code for the Discord. I'm trying to see where that person is. I'll tell you what, for everybody watching here, if you guys want a discount, click that link, book a call, and I will tell my team that for everyone that watched the live, make sure you tell them that you watched the live. For everybody that watched the live, I will tell them to give you guys a 20% discount. So if you guys want, click the link in the description, book a call, and I will tell them to give you a 20% discount. All right? Deal? Now, let's see how many likes did we get on here? Because I said if we get, 1,141 likes. All right. 1,141 likes. What trading platform do you need for the Academy? Any trading platform you like. But I would say the 2 most popular ones are Thinkorswim. And then if you're outside of the US, a lot of people use Interactive Brokers. What's the price after 20%? You have to book a call, brother. Book a call. Find out for yourself. If you really wanted to learn, you would learn. It's the first link in the description below, right? And then also make sure that you sign up for the mastermind on Sunday. But yeah, if you book a call and you are approved today and they tell you that you are approved, I will tell them to give you a 20% discount. Obviously, reference is live because they will not know. But I will tell them to give you a 20% discount, and that's for life. That's for life. So make sure you click on that. Thank you for doing this. We appreciate you. I want to know how to do that, Chris says. We do this every day. Again, there are many people in the academy on this chat. Just ask them. We do this every single day. And let me take a look at the futures. Thankfully, we closed that short. So we booked $400 per contract on S&P 500. I wasn't comfortable holding it for that long until Powell is done talking. And now I want to see if we have a trend. So if we break this here, and you will learn how to do this on Sunday if you join the free mastermind. If we break this here, and then I will look for longs on the retest. If we don't, and we end up breaking below this, then I will look for shorts on the retest. That's the beautiful thing about being a day trader. I don't have to guess. All right. So here's what we're going to do. We're going to be doing a giveaway now. So I want you guys to do this. I want you guys to put in your first name and last name, type it in the chat, and I will randomly take a screenshot, and I will pick 2 people and give you guys a month for 2 people. I'll give you guys a month to the Discord for free. And then 1 person I will give away a hat because you guys did your job. You got this. Over 1,000 likes. All right, ready, go. I'm going to take 1 screenshot. And then I'm going to take another one now. And I'm going to take a 3rd one now. All right. So we had 3 screenshots. So let's say from the first one, let's just randomly pick. Let's randomly pick. Eeny, meeny, miny, mo, eeny, meeny, miny, mo, eeny, blah, 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 blah. Let's randomly pick Kenneth Wiggins. Amy, you're already in the academy. You're already in the academy. Kenneth Wiggins. All right. I'll give you a free month to the Discord. Kenneth Wiggins. I want you to, how would we do this? How would I find you, Kenneth Wiggins? I'll figure this out. 1 second. Let me pick the second person. Second person. Let's go Brittany Best. That is the second month. Okay, so Kenneth Wiggins, Brittany Best. I want you to, all right, here's what I want you to do. I want you to DM me on Instagram, right? Kenneth Wiggins, Brittany Best. Nobody else DM me. And I will know. I will know. And if you guys are not on Instagram, then whatever. This is rigged like the stock market. I don't know any of these people keyboard. I literally just took a screenshot. Kenneth Wiggins, Brittany Best. You will find Z. Did you not pick my name because it was hard to pronounce? What's your name? Razak? I know how to say that. I lived in Abu Dhabi, man. And then the third person for the hat. Let's go. Let's go Oscar Luna. Let's go Oscar Luna, okay? So Kenneth Wiggins, Brittany Best, Oscar Luna. DM me on Instagram, and we will hook you up. You will find my Instagram link in the description. All right? What are those rigged snips? Bro, I'm literally just snipping. I'm literally just snipping it. Lebanese? No, I'm definitely not Lebanese. By the way, I can pronounce any of these names. Right? Amy. You're already in the academy. You want a second membership? Oh my God. You're so funny. Persian? No, I'm definitely not Persian. There's a random comment picker? Okay, we'll use it. We'll use it. We'll definitely use it next time. Okay? You say my name the alternative way? Aisha says. Well, I don't know. I don't know what you are. So in English, your name would be Aisha. I don't know where you're from. Them eye bags give it away? Son, your mom gave me these eye bags. What do you want me to do? That's why Z loves naan. I do love naan. Naan is amazing. All right. Let's see if we can yeah, I mean the trend looks bullish here, right? And I think this is completely smashing all the shorts, right? Now here's how I would play this, right? You have a high here, and you basically are looking at this. This is bullish market structure. And remember, more is lost trading against the trend than with the trend. So in this case, you clearly have bullish market structure, and you want to enter. You want to enter on pullbacks, right? So if this pulls back, you want to enter on pullbacks. You can use something like the Fibonacci. You can use fair value gaps. You can use whatever it is that they get you there. A lot of people use EMAs. I'm not a huge fan of EMAs just because they're not precise. I don't have anything against them if you're profitable, but they're not precise. But you would look for longs on pullbacks, right? Once you do not short this, you do not naked short this until market structure gives you something different. When market structure gives you something different, then you would look the other way. Like right now, right? We have potentially equal highs here, right? You have a high here and you have a high here. Okay. I would wait to see if we can get there. But once this happens, if we then come back down like this and we break market structure, then I will look for shorts on a retest, right? But I'm not going to naked short this. And certainly not going to naked long this from here, right? You could have, if you were just a supply and demand trader, you could have long this here. This will not work all of the time. To me, it's a 50-50 strategy. But you could have naked long this if you wanted to. I personally would not do that. However, for me, there were potentially not really many optimal longs here, right? I would long if we did end up getting to, again, getting back to this retracement level. on the S&P. On the NASDAQ, I think we are nearing the highs here. So now I want to see how it reacts from here. But a lot of trading is just waiting, right? A lot of trading is just waiting. And you want the market to give you an indication. You don't want to take the short. A lot of people will try and short this naked. But in my view, you will have to set your stop limit so high above where you normally set it in order not to get your stop limit clipped, right? But I'm not fretting this move because right now I'm only waiting for confirmation. So if the NASDAQ hit these equal highs here and cross below this, then I will look for shorts on a retest, right? So, yeah. Would be fun to play SPX options, 0 days to expiration options, especially now that they're probably a lot cheaper because we are towards the end of the day. But you only have 49 minutes left for that to work out. So right now, if I were to trade this, I would take longs from here and then hopefully try to get to these equal highs before end of day, right? I'm personally probably not going to trade SPX options here, but I would do this with futures because you could set a stop limit relatively easy on futures, right? My stop limit would look something... My stop limit would look something like this if I entered this. And this would be a 4-to-1 risk to reward ratio. And because I made already $400 per contract on that previous short, here we're talking about a 5-point stop limit, which is $250 per contract. I'd still be in the green if I took this. But at the end of the day, you're still dealing with FOMC, so this is not a normal day. You could get very erratic price action here. If this was a normal day, I'm longing this all day. I'm longing this until we get to 44.39.50. But again, this is FOMC. So Mirror Deal says gold analysis. Appreciate you. Thank you so much. Hi, you have different links in your YouTube profile. Are they valid? What are you talking about? I only have one Instagram account. I only have one link to the academy. And I only have one link to the free call coming up on June 18th, right? Which is this. So you will see that in the description. I'm not sure what you were confused about. Just got stopped out on NQ. What were you trying to do, Hugh? How did you get stopped out? This is a short. What did you get stopped out doing? Yes, one Instagram account, but there's many imitations. Yeah, dude, but if you click on the link, it's going to just take you to mine. It's not going to take you to the imitations. And I apologize for that. We're trying to get approved on Instagram. Where are you from? Are you North African? That's a very good guess, Usama. Very good guess. I'm not directly North African, okay? But in my ancestry test, there is quite a bit of North African in there, which I did not know. And if we break this market structure, then I would take shorts on the way down. So so far I didn't take any trades. Aisha, thank you so much for your donation. Brendan, he's Guatemalan. Egyptian. Do you trade US 30? No, I don't. You are Ethiopian. I'm not Ethiopian, man. I don't think I even look Ethiopian, I'll be honest. Did he stop talking? Yes, Powell stopped talking. Z, aren't you a fellow Chicano? Definitely not Ethiopian. Right? Bulgarian. Borislav, shut the fuck up, bro. I am Bulgarian. Gunmetal, I'm 2% black. Gunmetal, I met you, bro. No amount of sunscreen would help you. You're definitely not 2% black. Gunmetal, when you go to buy sunscreen from the store, they just tell you your sunscreen is stay inside. That's your sunscreen. Saudi Arabian, Caucasus Mountains. No, bro. No. Is Jay Powell your uncle? It depends which Rolex he gives me. Amy, Canada. Canada's not a race, Amy. Oh, a Moroccan from Canada? That is very specific, Amy. I appreciate the specificity. I'm not sure how, but your ethnicity usually comes up in most of these live sessions. Yes, because I'm a racial chameleon, bro. That's why. Look, I got Bulgarian, Ethiopian, Italian, Algerian, Tunisian, Moroccan, Cape Verde, Chinese even. ¿Está puertorriqueño usted? No. No. Are you visiting Turkey soon? I spent a whole month with my girl in Turkey last year. Absolutely loved it. Filipino, come on, Frapello. I'm an honorary Filipino. You know? Like Filipinos call me Kuya and shit. I'm an honorary Filipino, but I'm not Filipino. Amy, how are you going to go from Morocco to Lithuania? That's like two different shades. Ain't nobody in Lithuania looks as brown as me, okay? Palestinian mixed grill? You're so funny. Powell's still talking. He's taking questions. I don't know if you meant his speech or his not, though. Let's go back and check. Looks like they're on break.
You know, our jurisdiction at the Fed is over banks, actually bank holding companies and some banks. So that's really our main focus. You know, in terms of the events of March, as I mentioned earlier.
And by the way, I would not take that trade while he's still talking. Not a super long trade. I would take scalps like I did with the short, but not a super long trade.
The banks, it might be hard for me to identify something that we don't worry about rather than that we do worry about. So we're watching those things very carefully. And as we see things unfold, as we see what's happening with credit conditions and also all the individual banks that are out there, you know, we'll be able to take, to the extent it's appropriate, we can take, if there are macroeconomic implications, we can take that into account in our rate setting. And so I guess that's what I would say.
Can I just follow up on the last part? That's, do you risk further exacerbating those issues if you get up to another 50 basis points?
So that's, and I guess I meant to address that by saying, as we watch, we'll see what's happening, and if we're seeing the kind of tightening of conditions that you could be referring to, then we can factor that, because really we use our rate tool it really has macroeconomic purposes, so we'll take that into account. Of course, we have responsibility for financial stability as well, and that also is a factor that we're always going to be considering. Thank you very much.
Well, that was Fed Chair Jay Powell, as you heard there, after what our own Steve Leisman today described as a very hawkish pause. The Fed now projecting at least 2 more rate hikes before it's all said and done. Chair Powell saying nearly all policymakers see more hikes as necessary, also calling July a, quote, live meeting. The stock market selling off almost immediately. It's been a little bit volatile, and it is somewhat skewed, at least as the Dow is concerned today by what's been happening with United Health, but it was down by more than 400 points. S&P, as of a few moments ago, was in positive territory. So the market's still trying to parse out what the Fed chair said and what it thinks the Fed is.
Let's look at what the market is doing. Oh, yeah, you're right. This might look like a good short now. Let's see if we can get it. Okay, this is actually cool. So we popped above this area here, this resistance area, or as some people call it, supply. We popped above it. This right here can be considered a liquidity grab, right? Trapping all of the people that went short, taking all of their buy stops. So this can be considered buy side liquidity, and potentially, again, this is FOMC. I will be trading, if I do take trades, will be lighter than normal. But oh my God, this would be such a gift. This would be such a gift. Between a 7 to 9.1, between a 7 to 9 R trade. It's going to be hard not to take this. This is not a very convincing market structure break to me. I don't like to see these wicks here. So this would be a reason I don't consider this an A+ trade. But based on risk to reward, I would take it. Just based on risk to reward alone. And the fact that we already banked earlier, right? The fact that we already banked earlier. 44.1850. Let's see if we can get this. $44.24. Yeah, let's see how the market reacts from this level. Oops, wrong time frame. I might move my entry to my break even to entry. On this, I would go smaller position size for sure. I don't like these wicks down here. We are currently up on this slightly. And let's see what happens here. If we get a flush, my God. $44 to $450. Just going to set this and forget it. I could close this for profit, slight profit, like $50 at the moment per contract. And I don't like trading FOMC days usually, which is why I go light, but we'll see. What about Google? What about Google? You want me to look at Google? I think that trade that we had earlier was the trade. I wouldn't trade Google here. We had shorted it from here all the way down to here. No, I would not trade Google here. I'll be honest. And especially not with 30 minutes left, right? Like you want to trade the indices with 30 minutes left. Yeah. All right. I would dance for the stream if it flushed. All right, I'm gonna hold you to it, bro. I'm gonna hold you to it, Jason. It's going to be very erratic, I think. You can see violent wicks. That's why, I'm doing this for the stream. We made money earlier, so playing with house money, very tight stop. But I normally wouldn't take a heavy size with this. You have to be able to recognize that each trade for what it is. Not every trade is the same, right? NQ moving up nicely, but it did hit those equal lows. NQ looks shortable too, but again, wicks can completely take you out of a position. This can end up turning into a wick. This is a 3-minute candle. This can end up turning into a wick that could completely take out your stop limit. So, such as FOMC days, because there's so many traps, right? There's so many stops to take out. You said the other day S&P would go to 3,500 if there was a pause. What the fuck are you talking about, Jim? What the fuck are you talking about? You guys are so... I love all of you except for Jim Trumbull, okay? Do you think they'll actually hike again? It's not what I think. I personally don't think they'll hike again, but if the market thinks they will hike again, then you will likely not see a bottom on this, right? If the market thinks that the Fed is going to hike again, then you will likely continue to see this fall, right? What's funny is the VIX is down, I guess because the event had passed, but the VIX is down 3%. So, taking that hawkish pause in stride. Jim getting wrecked. Antonio Sandoval puts. I'm not swinging here. No, I'm not swinging here. He meant 4,500. Even if he meant 4,500, we are barely half an hour after the meeting, right? And I said, the Fed has to give an indication that they're not going to raise. If they come in talking tough, then that could be not, we could see some resistance. But also, it's only half an hour, not even after he's done talking. So, even if this idiot meant 4,500, this trying to play gotcha, I don't know. I honestly don't respect people like that. I don't understand the mentality of people like that, right? Plus, those people end up becoming, horrible traders. Here, Jim, eat a dick. I'm calling it live on air. What more do you want? I took a SPY put. What do you think? I don't like options towards the end of the day. That's what I think. I'd much rather play futures towards the end of the day. He needs to go to the gym. Me? Yes, I need to go to the gym. Here. This is for fucking Jim, all right? For calling me out for not being able to call shit. $500 per contract. See, the thing is, people like Jim are horrible traders because their daddy didn't treat them right, and they're trying to prove something on the internet by coming at me. I'm just giving away free info. Who else can do this? Who else is going to do this for you? Here, I'm just going to, should I take profit? Yeah, sure. There you go. $600 per contract. If I went heavier, I would take partials, right? I would take a contract off here, and then I would wait for my ultimate target. If you were in the short, you're welcome. I made you guys money twice on the live stream today. I bought calls against the VIX. I don't really like calls on the VIX, Hugh. I really don't. You know, you're betting for a really end of the world scenario. We're in a short right now. Yes, look at this, working out beautifully. I would take profits here though. If you have minimal contracts, remember I kept my position size small because again, it's FOMC. I have to recognize the trade for what it is. So I kept my position size small, took profits here, made 600 per contract on the day. I'm happy, bro. I'm happy. I traded FOMC the right way. Scalped during Powell talking, didn't make any huge moves, and then waited for the post-talk trend, waited for market structure break, waited to short the retracement, made everybody money, whether you're part of the academy or not. And I did this all for Jim, by the way. Hopefully you guys got in on the short. Congratulations if you did. Market is selling the news? Not really. The market is flat. So not yet selling the news. It's going up and down and we're taking advantage of it. That's it. Tarmo says, Jim, you ruined my mood. Man, trading is a different skill. It is. It is, Sonar. But I'm doing it live in front of you. I'm doing it live in front of you. Just made 120% off that. Rowan, that's fucking dope. Appreciate you. Appreciate you. So we hit 2 trades live. Would you guys want me to do this every single day? Guess what? We go live in the academy. But I do enjoy going live on YouTube. I do enjoy it, even if you're not part of the academy. Honestly, I enjoy doing it too. I love each and every one of you. I appreciate every comment. I appreciate every criticism. I appreciate every compliment. I appreciate every donation to St. Jude's. I appreciate it all. I appreciate it all. And if you want to learn how to do this in real time, I'm telling you right now, I will give everybody a discount, 20% off to the academy if you sign up. If you sign up for a call today, use the link in the description and make sure that you join this mastermind absolutely free where you will learn my methods in detail. This will be a 2-hour call going over in detail how I trade, how I draw Fibonacci's, etc. For those of you that you are really a rock star. I appreciate you, Hugh. I'm old. I've just been around the markets for a long time. I've taken some beatings. I've taken a lot of notes. I've immersed myself for 20 years in this shit. I better know what I'm doing. All right. Can you do this once a week? Maybe. I'm still in the beating phase. It's all about risk management. It's all about risk management, man. So, Sean, it's like, even if I'm wrong on a trade, my losses are small, right? And as I said, I'm 17 from my last 20. Now, if you count these two, 18, 19 from my last 22. Wait, sorry. 17 of 20, took 2 more trades. Yeah, 19 of 22. And even when I lose, I keep the losses small. That's it. Z, how old are you? You look healthy. Honestly, I'm 42. And I appreciate the, I have to think about it because I don't feel it. And I appreciate the compliment. But yeah. What time will the mastermind be? 9 p.m. Eastern. As it says, if you just click on the damn link, is right there, bro. Are all of your plays through options? Sparky says. Well, the 2 plays I played today have nothing to do with options. They were futures. So, no. We do options. We do futures. When the time is right, I do invest in stocks. So like in October, I sent out my game plan, October 22, when I bought the dip on all of those mega caps. I don't buy stocks often. I buy stocks very strategically. But yeah, you don't feel 42 because you ain't got kids and 2 wives. No, I have a superwoman queen, but no, I don't have kids. I can't trade futures. TD Ameritrade won't let me. I'm trading on TD Ameritrade. Positive. So not sure what you're talking about. I'm trading on TD Ameritrade. These trades I just took were on TD Ameritrade. If you are outside of the US and say you're on TD Ameritrade in Canada, then you should use Interactive Brokers. Okay? You look great for the shape you're in. Thank you. What's market doing? It's going up and down. Yeah, it's being the market. And you take advantage of the entries when it gives it to you. You need margin to trade futures. Absolutely. Absolutely. You need to get approval on TD for futures. Yes. But if you are in Canada using TD, they won't let you trade futures. TD Ameritrade is expensive to trade futures. All right. WebWorks. If you are making $600 per contract, do you really give a flying fuck about the $4 and change that it costs round trip for futures? Be honest. Because if you do, this is probably not the right game for you. I will happily pay $4 or $5 round trip to make $500, $600, $700 per contract. So yes, it is expensive, but making money is not free, right? So positive. You will get there, bro. You will get there. You know, when I started trading, I had a 9 to 5 too. In the dot-com crash, I really wanted to invest, and I didn't have any money then. 2008, I had been working in Silicon Valley for a good 7 years, so I had a little bit saved up. You know, if you really want it, it will happen. It does. You know, it doesn't mean that you're gonna get it when you want it, but you will get it if you want it. Okay. Meet and greet at King Taco in East LA, Antonio Sandoval. You guys want to do that? I will send out. Okay. I will send out on my socials an Eventbrite, and we'll do a meet and greet. I don't know if it'll be a King Taco. You and I, Antonio, might be okay in East LA because, you know, we look the part. Some people might not be okay in East LA. So I've learned so much being in the academy, and I took an options trading strategy class in Colombia. Oh my God. This is way more worth the money. Amy, that means a lot. And I know you from the Discord and from social media, so I know you are sincere, and I appreciate your words. Thank you so much. You know, I went to school for finance. I got a 4-year degree in finance, and I definitely learned way more on the streets of Wall than I did in the finance class, right? Santa Monica meet and greet. We'll see where it is. We'll see where it is. How old are you? I'm 32, $100K portfolio. Is that good? Blue chip Joe. Fuck yeah, that's awesome, bro. You got a 6-figure portfolio and you're 32? Hell yeah. Hell yeah. Of course. Of course that's good, bro. That's amazing. I certainly didn't have a 6-figure portfolio when I started investing, but guess what? The amount that I invested, I think, if I want to, I will have to go back and look, but I think in 2008, my initial investment was $60K, and then a few more in 2009 and 2010. But I did get a lot of stocks, at insane levels. So now, obviously, that portfolio is exponentially gained. But of course, that's good, man. That's amazing. Most people in America live paycheck to paycheck. If you were able to garner a 6-figure portfolio, that's amazing. He's saying drop out of college. No, I'm not saying that. But I definitely don't believe in shitty majors, okay? If you are going to major in something that is actually applicable in the working world, great. If you're going to major in art, you're going to end up working at Starbucks. And no shade to people that work at Starbucks, but you just shelled out $100K of education to make, people's macchiatos. But I do believe in college for applicable skills that you can actually get paid in the working world, right? Even though I never ended up working in finance for a long time, my first job was in finance. But then I ended up working in software because all of my friends that majored in computer science were making freaking 6 figures right out of college. And I was like, what the hell? I'm making 30K as a junior financial analyst. And my boys working at Intel and at Apple making, over 100K. So I learned how to code. And I ended up going into Silicon Valley and ended up stuck there for at least 15 years and only traded for myself. I never applied finance besides trading for myself, right? And then now my whole world revolves around finance because, I teach it. So anyway, that is the long and short of life. 42 is a great year. Definitely my favorite tequila. I'll tell you that much. I love your humbleness, Z. Appreciate you. Thank you so much for that comment. It really means a lot. Is 5K good for a 21-year-old? Fuck yeah, bro. At 21, I was stealing groceries. What are you talking about? Of course that's good. At 21, I legit was stealing groceries. Not happy about that. But there was a time in my life around that time where I was dead broke. And there was a time when I walked into a fucking Ralph's, put everything in my cart, acted like I was on the phone, and walked straight out the door. And you know what I did then? I kept the receipt. Why did I keep the receipt? Because I promised myself that I would not go out as a fucking thief. And I kept the receipt. And when I finally had enough money to afford those groceries, which was, I was a couple months away in terms of pay because I had back paying rent and stuff. I was really, really broke. I took the receipt. I took the money that I owed, or the money that I stole. And when I say receipt, obviously, I created the receipt. I didn't buy anything because I stole it. But I kept the receipt of everything that I stole. And then I went back to the Ralph's. It was in Santa Monica. I went back to the Ralph's and I gave the store manager the amount of money for the stuff that I took. And he said, I cannot take this. And I said, I was here a couple months ago and I stole an entire basket full of groceries. It was almost like $170. Groceries were a lot cheaper at the time. And this was an entire basket of groceries. And I ended up giving it to him, and he said, I can't take this, I'm sorry. And I just left it, and I walked out. even though it might not have been the right thing to do, at the time I was hungry. So, you know, yes, long story short, 5K is really good. Okay. At 21. I was overdrawn at 21. Okay. Z equals MVP of day trade. Thank you so much for that comment, Mickey. Appreciate you. Appreciate you. Entire basket today is an entire paycheck. Yes, I can appreciate that exhumed. Every time me and my girl are at the grocery store, we say to each other, like, thank God that we're able to afford this. I don't know how the fuck families are doing it. Honestly, like, you buy some juice, some eggs, you know, maybe a few fruits here and there, and you're already at $50. And you're like, how the fuck are families doing this? So Monday market is closed. Just a reminder to everyone. What is Monday? Remind me. What is I don't think the markets are closed on Monday. What is Monday? I don't know. Would you ever stop trading if you have a certain amount of money? No, man. I love trading. I love trading. No, I would never stop trading. Would I stop, you know, running the Discord? Would I stop having a YouTube channel? Maybe at some point. Yeah, maybe at some point. It is stressful, but I enjoy doing it for now. But there might be a time when, you know, I'll be outie like a Saudi. Juneteenth. Apologize to those who celebrate. Okay, so market is done Monday. But guess what will be open? Futures, baby. Futures will be open on Monday. What age did you switch to software? I switched to software at... let's see, 21. I dropped out of law school. That's an even bigger story, which is part of the reason why I was broke. And then 22. Between 21 and 22 was my first software job. 22, I would say. The course is separate, Ricky James. Book a call. They will give you a discount, especially for being one of the OGs. Book a call. Talk to an ambassador. Let them let you in. Let them give you a discount. 21 plus 15 plus 8 is your age. Close. I'm in my 40s. Yeah. Close. I'm 42. So. Are you putting... I closed my ES, bro. If you're an ES, you are up majorly right now. But I closed it. Yeah, I'm closing it. I closed it because of this here. We're nearing the end of the day, and we have this here. So I personally, if you have minimal contracts, 1 or 2, I would close them here. If you have 5, partially close. But I would close it here, bro. Go, take your money, go have fun, go to the mall, do something. Have you been to Muscat before? Yes, I have. Oman is beautiful, bro. I've been to a lot of Arab countries. I've been to Oman. I've been to Emirat. I've been to Qatar. I've even been to Saudi. I've been to Egypt. I've been to, where else have I been to? Yeah. I've been to Jordan for a very short time. Oh, wow. We're getting a nice flush here. If you're in that short, congrats. I closed my position, but congrats on this. Do you ever hold your futures long term? Nah, bro. Oh, Dubai, of course, bro. I used to live in the UAE. I lived in UAE. I got a lot of friends in Dubai. Visit Kerala, God's own country? I'm sure a lot of places think that it's God's country. Not just Kerala. Woo, what a flush. Someone please tell me that you're catching this while I'm giving you my life story. This would be that's amazing. I don't ever regret taking profits on things, but this is amazing. Amy, of course you're in it. Of course you're in it. I love the way you trade. Of course you're in it. You're fearless. You are fearless. I'm in Q puts. Awesome. We already made our money. Yeah, Aisha, thank you so much. Took the trade. Aisha, where are you from? So that I pronounce your name correctly. Because if you are from the Middle East, well, it depends. If you're from the Arab world, you probably say Aisha. If you speak Farsi, I don't know how they pronounce it. And if you are American, Aisha. How can someone trade futures without more than 12K in your account? You could trade MES, bro. So that's ES. MES are the micros. Same exact thing as ES. They just are a tenth of the price and a tenth of the movement. Caught that, Z. $1,700. That's how we make money, bro. Hell yeah. I'm happier when people make money than when I make money. And by the way, these are, anybody on here can tell you, these are the exact type of trades that we take in the academy. The exact same strategy that I use. Ah, shit. I'm blocking the chart. Not again. Fuck. What about now? Who's this? Brooke Shields? Stocks hold higher for the week. All right. This is probably just eating up my memory. Wow, this was probably my favorite live stream, man. I don't know why. It feels good. This was my favorite live stream. Honestly. 15 handles. Fuck yeah. Fuck yeah. Amazing. Made 200% on SPX puts. Amazing. I can finally afford Messi tickets after this. Amy, I'm sure you could have afforded it before, but now it feels better to pay for it with winnings. You say that every time? Maybe because I mean it every time, Keith. Damn, bro, don't rain on my parade. All right, I will leave you all with, again, if you sign up for a call today, you will be part of the coveted 20% club. And then here's the link to the mastermind, free, absolutely free, on June 18th. And of course, if you're in the academy, you get access to all the masterminds. So end of day squeeze. You know what? I'm not conscious investing. I'm not going to push my luck, bro. I made my money. I'm all good. I'm all good. Now I take my money and go eat Chipotle. Hugh, yes, there will be a time for another ZT trade. That time is not now. I appreciate each and every one of you. This was fucking amazing. We will do it again very soon. Maybe we'll stream tomorrow. What's going on tomorrow? Jobless claims, very boring metric. Maybe we'll do it. Who knows? But I appreciate each and every one of you. Thank you guys so much for hanging out with me. Hopefully I made all of you money. Again, click that link, sign up for the academy, click the link for June 18th as well. And I will see you